You've done the hard part. You saved. You said no when it would have been easier to say yes. You didn't blow it on lifestyle upgrades or temporary wins. Now you're sitting on something powerful, $100,000. But now comes the question that stops most people in their tracks. What the hell do you actually do with it? Leaving it in cash feels safe, but you know it's shrinking thanks to inflation. Jumping into the stock market feels risky, especially right now, when headlines are full of volatility, rate hikes, trade wars, and AI euphoria. So, what's the smart play? That's what we're here to solve today. Welcome to Three Pockets Finance Edition, where today I'm going to show you 5 powerful iShares ETFs that could turn $100,000 into millions, without timing the market, chasing hype, or needing a Wall Street degree. This isn't about picking the sexiest ETF of the moment. This is about building a complete, diversified, long-term portfolio, designed to weather inflation, ride out correction, take advantage of compounding, and support long-term wealth and financial freedom. I've chosen these 5 iShares ETFs not just for performance, but for their role in a smart strategy. Core growth, steady income, global protection, high innovation, and explosive long-term upside. Let's start with the foundation. Number 5. iShares Core S&P 500 ETF, IVV. Think of this ETF as the engine of your wealth machine. IVV tracks the S&P 500, which means you're investing in 500 of the largest, most successful companies in the US, from Apple to Amazon to Johnson & Johnson. 5-year return. Approximately 90%. 10-year return. 157% average annual return. Approximately 9.87% expense ratio. 0.03%. Ultra low. Dividend yield. Approximately 1.43%. Growing at 6.95% annually. Why it matters? It's not flashy, but it's steady, reliable, and it compounds. If you invested $100,000 in IVV today, in 10 years, $287,181 in 20 years, $811,131 in 30 years, $2,187,030. You didn't trade. You didn't time the market. You just stayed in. Number 4. iShares MSCI Global Gold Miners ETF, RING. When things get shaky, gold shines. But instead of investing in gold itself, RING invests in the companies mining it. And when gold prices spike, these companies thrive. 10-year return. Approximately 166% average annual return. Approximately 9.98% dividend growth. 12.3% annually expense ratio. 0.39%. This ETF isn't calm. It's cyclical. But when the market panics, RING runs. $100,000 in RING could become 10 years. $287,141. 20 years. $846,653. 30 years. $2,580,800. Perfect for hedging chaos while still building long-term growth. Number 3. iShares Core Dividend Growth ETF, DGRO. You want consistent income? Meet DGRO. This ETF only includes US companies that increase their dividends every year, and cuts out risky high-yield traps. Dividend yield. 2.35% dividend growth. Approximately 12.53% 5-year return. Approximately 65% expense ratio. 0.08%. Here's where it gets wild. If you invest $100,000 in DGRO and reinvest every dividend, in 30 years, you're sitting on $3,758,430 with $1.55 million of that from dividends alone and generating $21,190 a month in income. That's retirement-level cash flow from one ETF. Number 2. iShares Global Tech ETF, IXN. Now we go global. IXN gives you exposure to the biggest tech names on earth, Apple, Microsoft, Nvidia, plus major international innovators. 10-year return. 353% average annual return, 16.24% dividend yield, approximately 0.49% expense ratio, 0.41%. This is your fast lane ETF. Your $100,000 becomes 10 years, $463,363, 20 years, $2,119,894, 30 years, $9,542,575, writing the backbone of the digital economy. Cloud, semiconductors, and everything next. Number 1. iShares Semiconductor ETF, SOXX. This is the big one. SOX is focused entirely on semiconductors, the chips that power AI, smartphones, EVs, data centers, and basically everything that makes the future run. 10-year return, 456.18% annualized return, approximately 17.48% dividend growth, 11.45% expense ratio, 0.35% if you invested $100,000 into SOXX. After 10 years, $529,310, 20 years, $2.73 million, 30 years, $13,895,328. Yes. This ETF alone could turn six figures into nearly $14 million. It's volatile. It's concentrated. But if you can handle the ride, the reward speaks for itself. Let's put it all together. Here's what a balanced portfolio using all 5 ETFs could look like. ETF allocation role: IVV 30% core market growth, DGRO 25% dividend growth and income, IXN 20% global innovation, SOX 15% high growth tech, Ring 10% inflation hedge. Chaos play: $100,000 across these 5 becomes 10 years. $376,000, 20 years. $1.65 million, 30 years. $6.2 million. Final thoughts. Your move. Your future. You don't need to be a stock picker. You don't need to time the market. You just need a plan, and the discipline to follow it. These 5 ETFs give you diversification, income, innovation, protection, growth. The hardest part isn't choosing the fund. It's staying the course. So now the ball's in your court. Are you going to keep your cash parked, or are you going to put it to work? What would you do with $100,000? Which of these ETFs are you already in, or thinking about jumping into? Drop your comments below. We read every single one. And hey, if this helped you feel more confident about your investing journey, hit that like, subscribe, and notification bell. It helps us keep creating smarter, sharper content that cuts through the noise. Don't just save your money. Grow it. Build with it. Change your life with it. This is Three Pockets Finance Edition. Thanks for watching, and I'll see you in the next video.